and welcome to a very special show. Given the very special circumstances we are going through, our guest is Mark Mobius of Franklin Templeton. This is the Mark Mobius exclusive. Well, Mark, thank you very much for joining us at what is a very crucial juncture for India and for emerging markets. It's almost as if there has been a huge global reset. We've had unexpectedly a Trump victory in the United States, changing the balance for equity investors between developed markets and equity markets, and as if that was emerging markets, and as if that was not enough, we had this complete bolt from the blue from Prime Minister Modi on November the 8th, the same day as Trump was elected, this demonetization. So we have a lot of questions for you. Well, first up, Mark, demonetization. Do you think it is, everybody is calling it a near-term pain for long-term gain. Is that your view?
Well, I think the purpose is very noble. They want to attack corruption, and that's fine. I'm afraid this is not the way to do it, because the big fish usually know what's coming, and they can get away. And as you know, if you look at all the ways that people are getting around this, you'll find that it's not going to be that effective at the end of the day. And of course, it inconveniences a lot of the small shopkeepers and other people. So it's really unfortunate that they took this route. I think it would have been better to take another route to attack corruption. But in any case, it's done. And I think it will have an impact on economic growth, maybe 0.5% less than what you would expect. And of course, it will tie up businesses for quite a while now, at least until the end of the year. So I think at the end of the day, it's unfortunate that it happened. My big worry is that it may hurt Modi's election in November. His party may be hurt as a result of that. But let's hope that does not happen, because we believe the Modi government's efforts at reform are very, very good.
Well, you're right that it's done, so now we cannot debate the whys, but by its very nature, this was a policy that could not have been a national debate and then implemented. Its value, if any, was only if it was introduced suddenly with no one in the loop except maybe the governor and the Prime Minister. But yeah, as you say, it's done. How many quarters do you think growth could take a beating? Is it just this quarter? Is it this and next, or even longer?
It will be this quarter, and then by the end of the year, it will be over. I believe people will have adjusted by that time.
Well, there are people who believe that consumption was the only part of the Indian story which was playing out well, not investment. And that's taken a hit, and it could result in job losses at the lower level till confidence comes back. So, you know, how much would you shave off from GDP growth or from earnings growth, for that matter?
I would say 0.5% is probably what we'll see, because it's not going to last very long, as we just noted. Be 1 quarter, and overall it'd be about 0.5%.
What do you expect would be the fallout in terms of inflation and interest rates? Well, let us assume out of the 14 trillion rupees that is being changed, about 4 trillion doesn't come because it was tax evaded money. Will that mean a big, crunching of aggregate demand? Are you seeing a big fall in interest rates next year?
I'm seeing a fall in interest rates, mainly because the Modi government wants that to happen. They want lower interest rates, and I believe the inflation picture is not that dire. Inflation is pretty steady, and I think they could afford another interest rate cut. So we're seeing that longer term, despite what's happening in the U.S. Now, of course, in the U.S., we are seeing better growth, higher interest rates of the Fed, but I don't think that's going to have a big impact on the direction of where India is going in terms of both inflation and interest rates.
Actually, that would be a counter for India. You have to also take into account what the Fed might do. If you're penciling only one interest rate cut, you don't see a very big consumption. I mean, the expectation was that it would be an interest rate cut-led consumption improvement next year. You're not buying that?
No, I'm buying that. I think there's going to be improvement next year, better consumption, lower interest rates, and of course these two are aligned. This one will affect the other, and I believe that the prime rate has to come down. We're looking, of course, at the repo rate, But if you look at the gap between the prime rate and the repo rate, it's much too wide. The prime rate has to come down.
Well, let me come to the other angle which a lot of people are exploring. As I was saying, about 14.5 trillion rupees are going to be changed, and it's expected that probably 4 or 3 or 5 trillion will not come back. Some people are expecting that that would enable the Reserve Bank to give a large dividend to the government, and therefore a big fiscal stimulus could be on its way next year. One, are you buying that argument? And two, what will be the implication as a stock picker?
Yes, I am buying that argument, and I think it would be very positive going forward for the economy if the government is able to effectively invest in infrastructure and accelerate all the infrastructure projects. This would be very, very good for the economy. As you know, this is one of the big barriers that India faces in terms of growth, to accelerate growth. Mind you, growth rates in India are very, very good, among the highest in the world, but they can even go higher with a better infrastructure.
Do you expect this move to result in some kind of a fiscal surplus next year as the informal economy gets formalized, or for whatever reasons people are too scared now to jump taxes?
I think there could be on the margin, but I don't think this would be a huge factor, because the government will want to get that money out into the economy. So they would want to not have a big surplus and get that money spent. And the other factor here, by the way, is the influx of money going into the banks means, as Mr. Modi has already mentioned, that the banks should be able to accelerate the lending for investment. So that's another factor which we should be aware of.
Well, I know we have to discuss another much bigger elephant in the room, the Trump election. But before that, purely because of the demonetization, the expected rate cut, the expected fiscal stimulus, how would you change your views as an investor? Which kind of stocks would you prefer?
Well, I think we have to look at the banks, first of all, because of the spread that they're having right now becomes very, very profitable for the banks. And I think the IT sector has been hit too hard. The prices have come down too much, and there's an opportunity there as well. And of course, at the end of the day, any consumer-oriented stocks are interesting.
Well, I would obviously want to ask your views on the IT sector, even depending on your view on Trump and his impact on emerging markets. But when you say banks, actually the stocks that ran this year were the non-bank finance companies. So bank is really large. There are the public sector banks which could get a recapitalization push if that extra money is available to the government. There are the private sector banks which largely are out of infrastructure. Then, of course, there are the non-bank finance companies. Which leg are you now positive on?
Well, I would say since these non-bank financial institutions have had their run, now's time to look at some of the big banks, state-owned banks, and the other big private banks.
Mark, I have to take a break, but thereafter, the real big question that 2017 will grapple with, President Trump will be sworn in on January 20th, and what will he do to the global economy, global trade, emerging markets, and therefore your view on Indian stocks? Coming back in a minute.